All right, good afternoon, everyone. This is Joe Bacella, Director of Client Success here at Chaikin Analytics, and I'd like to welcome you to our presentation of Trade Like an Expert, how to quickly find strong candidates for swing trading and options. Presenting today is Marc Chaikin, founder and CEO of Chaikin Analytics. Now, as a reminder, this webinar is being recorded, and a copy will be sent to everyone who has registered. You can submit your questions throughout this webinar using the Zoom Q&A window, which you can access in the upper left-hand corner of your screen. Now, before Marc Chaikin joins us, we would like to invite the co-founder of Wall Street IO, Micah Lamar, to the webinar. Now, Micah is an expert stock and options trader with a specialization in taking complex cycle analysis indications and breaking them down into easy-to-follow steps. Micah is most famous for writing the #1 rated Apple Investment Strategy Guide. This book covers the 7 steps to boosting your swing trade probability in Apple and in Google. These specific 7 steps will be covered during our webinar. Now, to get us started, here's Micah Lamar.
Hey everybody, how's it going? This is Micah Lamar from Wall Street IO. Thank you so much for coming today. I am really excited about today's presentation because I always walk away with a couple pages of actionable notes for Marc's presentation. You know, Marc Chaikin and I met a few years ago, and since then he's really been my go-to guy for all things fundamental analysis and kind of understanding a zoomed out perspective of the stock market. In fact, he's actually built Chaikin Analytics into what I believe to be the single best platform for fundamental analysis, because he's been able to basically distill 20 independent factors into one easy to use power gauge rating. Now, out of those 20 factors, his power gauge is about 85% fundamental. And to do this kind of factoring on your own for all your stocks, you literally have to be like a quant with a PhD. Marc makes it so easy, and that's why I'm really excited to have him on today. And with that, I'd like to introduce you to my good friend, Marc Chaikin.
Micah, thank you very much, and welcome everybody. Who'd have thought that a casual meeting at one of John Najarian's conferences about 2.5 years ago would have led to such a productive partnership? It's been a pleasure for me to see Micah grow what was Apple Trader into Wall Street IO, and some of his new platform analytics and backtesting capability are something that I'm absolutely in awe of. And by the way, very compatible with Chaikin Analytics. So many Wall Street IO subscribers are also Chaikin Analytics subscribers. So in today's webinar, we're going to talk about everything I've learned in 50 years on Wall Street. I've survived 10 bear markets. Back in February, we thought that might be relevant. Doesn't look that way right now, although you wouldn't know it from the headlines coming out of the CNBC's Alpha conference last week, which sort of terrorized the market when such smart people like Carl Icahn and Paul Singer were bear, not just on bonds, but on the stock market. For 45 years, I've been using technical analysis. The reason is, after surviving or living through the first bear market that I ever encountered, which was in 1969, 70, I realized that you needed more than just fundamental analysis to survive and prosper as a trader or an investor. But I recognized all along that technical analysis just picks up the tracks of the big fundamental investors. So I've been very lucky because I've been mentored by some of the smartest and most successful institutional investors. Some were colleagues at firms that I work for, others were clients. And the sum total of what I learned from them is embodied in the Chaikin Power Gauge rating, which, as Micah said, is the heart of Chaikin Analytics. It does the fundamental heavy lifting for you. And it's the culmination of my life's work. So it's really important to know that something works because it's based on what the smartest investors on Wall Street are looking at. And you'll see an example of that very clearly in a minute. Chaikin Analytics is being used by the pros like Paulson Hedge Fund and Soros and Fidelity Investments, and we're quoted in the media. Barron's wrote us up as the top quantitative site on Wall Street, echoing Micah's kind words. But we're also being embraced by some of the smartest, hate to use the word gurus, but successful commentators, John Malden and John Carter at Simpler Trading, and we'll see a couple of testimonials from them. I'm a big believer in testimonials. If you're not, I apologize, but I think that they add validation to the methodology, and we're here to teach you that methodology today. So what you're going to learn in today's webinar is how to find bullish and bearish stocks with potential to move up or down using the Chaikin power gauge rating and relative strength. So it's a combination of fundamentals and technicals. I'm going to show you how to use Chaikin Money Flow, which has been in the marketplace for over 35 years on TradeStation, on every one of your brokerage firm platforms, on stockcharts.com for free. I'm going to show you a trick that we've been teaching institutional investors for over 25 years on how to anticipate future price movement using special pattern involving Chaikin Money Flow. You won't read about this anywhere else. Stockcharts.com has done a great job of documenting Chaikin Money Flow, and they feature it a lot. In fact, Chaikin Money Flow is going to be featured on Jim Cramer Mad Money tonight. So after the webinar, if you still have some mental bandwidth, go watch Jim Cramer and his Off the Charts segment, because he's going to be referencing Chaikin Money Flow. We're going to also show you how to improve your timing with Chaikin buy and sell signals. Now, I know that Micah has done an extraordinary job of giving you a backtester to take technical inputs and backtest them for individual stocks, and that is fabulous. So I take that very seriously. It's a great compliment to what he's done for the Wall Street IO community. We have 6 pairs of buy and sell signals. They're integrated into our platform, so they're easy to use with the power gauge rating. But whether you use Micah's signals or ours or some combination, we're going to show you in a later slide how important discipline is to trading. Also going to show you how to play good defense, and that means pruning weak stocks out of your portfolio, avoiding landmines that destroy trading results and portfolio gains, and finally how to use earnings alerts and earnings season with options to supercharge your profits. I'd like to start out by asking you to take a look back over the last 3 months of your trading. Did the Brexit vote and the volatility that came into the market in that very steep 2-day sell-off, or concerns about the Fed and all the volatility that's been created leading up to tomorrow's Fed announcement, did that have you spooked? If it did, type a big G in the question box for ghost. And I'm seeing a lot of G's in there, and that means you're pretty much like most of our webinar audiences. The headlines have distracted people, they've spooked people, and the volatility is a big concern, and we're going to address that in the webinar. So I'd like to start out by focusing on the market. Obviously, with the Fed decision on a rate hike coming up tomorrow, and with the first presidential debate on Monday night, the markets are a little nervous, and it's important to have a perspective on the market. So how can Chaikin Analytics give you proprietary added technical view of the market? Because basically, when looking at the market, and we use the SPY Spider ETF as our proxy for the broad market, the S&P 500 ETF, most actively traded instrument in the US, we have 3 ways that we look at the market. We look at Chaikin Money Flow for the Spider, and we'll show you that in a minute. And you can get that, as I said, on any of your brokerage platforms or on stockcharts.com. We also have something proprietary that we call the Power Bar. It's the number of stocks in any index, list, ETF, industry group that have bullish versus bearish power gauge ratings. It's a great read on the underlying potential for that instrument or that segment of the market. And then finally, something new that we just rolled out in January, exposed to the Wall Street IO community in March, is a way to look at the relative strength of the equal weighted S&P, the RSP, the Guggenheim equal weighted S&P, versus the Spider. Now, as most of you know, the Spider is a capitalization weighted index. Now, what that means is in 2015, when the market was up barely 1%, the FANG stocks, Facebook, Amazon, Netflix, and Google, with the large market caps, and Apple, contributed an outsized influence on the performance, because most of the stocks in the S&P were down substantially in 2015. But because those 4 stocks were so strong, the S&P finished the year up a fraction of a point. What I'd like to look at now is the current state of the S&P viewed through the lens of Marc Chaikin and Chaikin Analytics. So we'll start with this W-shaped bottom here in February. Now, declines of more than 10% in a popular average almost always require some testing and retesting, and usually it takes the form of the shape of the letter W, which you see here. Now, we had a W-shaped bottom in September, starting with the August sell-off, but this bottom was different. In September, when the market rallied to form the middle of the W, can you all see that W pattern for me? If you can, type a W in the question box, please. In September, when you had a rally to form the middle of the W, and it was a steep rally, Chaikin Money Flow stayed negative. That said that the institutions were not participating in the rally. Contrast that to what happened in February. Not only was Chaikin Money Flow positive when you made that low at 1809 on the S&P Cash Index, but it stayed positive on the rally and actually grew. And when you came back down and retested that low, look where Chaikin Money Flow was. It was starting to climb and climb dramatically. Now, Chaikin Money Flow, as most of you know, looks back over 21 days, looks to see where a tradable closes and its trading range, relates it to the volume. It's a good measure of institutional buying and selling. Has been for over 35 years. Now, that W bottom holds a lot of potential, but only if it's confirmed by Chaikin Money Flow. And look what happened when you traded up past that W. Chaikin Money Flow just kept rising, and that's when we turned really bullish in late February, when many people were looking for another leg down and potentially a bear market to 1600. And look what's happened to Chaikin Money Flow all through this rally. You had a little hint of selling on that 2-day Brexit drop from 2100 all the way down to 1990, but not very much, and it immediately picked up steam, and that's what enabled the market to break out above that 2100, 2137 resistance area, which has held the market back since April of 2015. Now let's look at the power bar. When you broke out, in fact, starting in April of 2016, the Chaikin power bar went positive, meaning that there were more stocks with bullish ratings and bearish ratings in the S&P 500. That reversed a 12-month pattern of negative Chaikin power bar readings. Now, why is that important? Because the fundamental potential of the stocks in an index determine the ultimate price movement. So as we broke out in July above 2137, there were many more stocks with bullish power gauge ratings. I think we got up to about 130 bullish and 74 bearish. So a preponderance of bullish stocks. As of last night's close, that bullishness has been reversed. So one of the 3 pillars that I based our bullish opinion on in the spring of 2016 is no longer there in the large cap sector. You'll see in a minute that it is there in spades in small cap stocks. So 89 stocks with a bullish power gauge rating, 122 with a bearish rating. It'll mean something when you go back up to 2200, where we ran into resistance. And if the power bar turns bullish, the likelihood of breaking through 2200 is enhanced. If it stays negative, that's a sign that we may not break out. Now, when I started out in the business, there was an expression that when the generals are leading, the foot soldiers have to follow. Back then, we had General Motors, General Electric, General Telephone, General Instruments, whole series of stocks beginning with the name General. And it was a very good way to characterize breadth divergences. And that's what we saw in 2015. The generals, in this case, Facebook, Amazon, Netflix, and Google, were strong, but the average stock in the S&P wasn't. Now, how do we know that? Using a very metrics-based indicator. Let's go down here to the bottom. This is a relative strength indicator of the RSP, the Guggenheim equal weighted S&P, to the S&P itself. Beginning in March, this relative strength indicator went from red or bearish to green or bullish. That meant that the average stock in the S&P was outperforming the index itself. That is a very healthy sign for the market. Now, a lot of people use the McClellan oscillator, new highs, new lows, advanced decline statistics to gauge breadth. This one simple indicator can do that for you, because over the last 8 years, whenever the average stock in the S&P has been outperforming the spider, the market has tended to work itself higher, sometimes very, very big. Every decline in the past 8 years has been associated with the average stock in the S&P underperforming the average. So breadth divergences and lack of participation can submarine a market rally, even in the context of a 7-year bull market. Now let's look at the IWM, the Russell 2000 Small Cap Index. A lot of people trade this. They use it as a way to get small cap exposure without picking individual stocks. Of course, we believe in stock picking and American exceptionalism. You can outperform the market. You can outperform an index by finding the best stocks based on the fundamental potential of the Chaikin power gauge rating combined with two simple technical indicators, relative strength and Chaikin Money Flow. But doing the same analysis, the IWM started outperforming the S&P here in May, and it's continued to outperform. So whereas the S&P has toyed with its Chaikin long-term trend, the IWM has stayed significantly above it, respecting that lower Keltner volatility band. And the rallies have been better. Now, that's confirmed by the power bar. Notice that there's better than a 2-to-1 relationship between bullish and bearish power gauge rated stocks in the Russell 2000. So small cap is where the action's been. I know for those of you who are long Apple, there's one large cap name that you're probably pleased with. And we'll do a little analysis of Apple right at the end of the webinar. So stick with us for that. So having looked at the market, what's the bottom line conclusion? Don't be scared by all these bearish headlines, even from Wall Street pros. Try and find small cap stocks or mid cap stocks, because they're also outperforming with positive power bar. And be a little leery of some of the large cap names that are not participating in the rally. So Warren Buffett has famously said that investors should be fearful when others are greedy, and greedy only when others are fearful. And when you look back at Brexit and fears surrounding the Fed and some of these sharp sell-offs we've had when bonds and stocks sold off last Tuesday, there's opportunity when people are panicking. And here's one example of that. We're going to use Brexit as sort of our poster child, although you could have used Monday's sell-off last week as another example. Here's FFIV, F5 Networks, very much unloved by Wall Street. Stock basically was in a downtrend through a good part of 2015, selling off here from 122 all the way down to 86. And then something happened. The institutions started piling into the stock. How do we know that? Look at these big mounds of green in Chaikin Money Flow back in March, April, and May. And the stock broke out. In former webinars, we've used the Wyckoff chart to indicate the 4 stages of a market on the upside and the downside. This is a classic example of a breakout from a downtrend in the Wyckoff methodology. Sometimes the bases are longer, but the patterns are the same. You break out, Clearly, the institutions were buying the stock. Power gauge rating turned bullish in mid-April, right after an earnings surprise. Now, we have an earnings module in the system. We get this information from Zacks. They have a unique way of looking at estimated earnings and reported earnings. They categorize this as a bearish earnings report. How do we know that? Because the earnings indicator is colored red, not green like it was here or moving ahead here. But the guidance that F5 gave was positive and the stock spiked up. And shortly thereafter, Chaikin relative strength, just as it did with the IWM, went from underperforming the market to outperforming. So now you have two pillars of the Chaikin methodology in place, and Chaikin Money Flow stayed strong. So what happened? The stock worked its way up to about 110, and then back here in June, it spiked up to 124. Now, the reason it spiked up were takeover rumors. That probably accounts for this big influx of institutional money. There's always leakage on Wall Street. I'm not going to call it insider trading, but sometimes it's just intelligent guesswork. So a big spike up in F5, and then it was consolidating very nicely because we don't want to buy those spikes typically. We want to wait for a pullback, a consolidation over 3 to 8 days. And then Brexit came along. And just when it looked like F5 was about to move back up and make a new high, you had a 2-day sell-off from 120 all the way down to 107. And we triggered what we call an oversold buy. I owe this one to Larry Williams, sort of a mentor to me because of his accumulation distribution work in the 60s and 70s. And he has said that if you like a stock and it makes a new 8-day low, gets oversold, that's a potential entry point for swing trading and options trading. Now, we qualify it by saying the power gauge has to be bullish. So that's our way of saying we like the stock. Fundamental factors are lined up. So here's a classic example of Warren Buffett in action, taking advantage of fear, using that oversold buy signal on the second day of the Brexit sell-off to get into F5, and then sure enough, 2 weeks later, 2.5 weeks later, a positive earnings surprise, another spike up to new highs at 125, and then more consolidation. Power gauge stays bullish. It's outperforming the market, but we did get a lot of selling in here. So maybe the people who bought in here on the takeover rumors decided to take their profits. But a week ago, when the market was selling off on Tuesday, we got another oversold buy signal because of an 8-day low with a bullish power gauge rating, and that was a good entry point. So we've given you an advanced look here about what we're going to be teaching you and how to find these stocks, because it's nice to show a classy example like this, but you've got to be able to find them for yourself. And that brings up the concept of time, which I believe is our most precious commodity. It creates the problem of information overload. It exacerbates the problem of information overload. We're constantly distracted by Twitter and Facebook, LinkedIn, email, and that's just in our personal lives. When you're making trading decisions, it's very important to focus, as we just did on the market. And in fact, in the center of this slide, the question is asked, how do you focus in the age of distraction? So many websites to go to, so many chat rooms, so many services, all well-intended, some good, some bad. Joe Bicella, who's organizing the webinar and who's going to pop in a little later to show you our screener, told me that one of our subscribers actually printed this out and put it on his trading bulletin board. Just as a reminder that focus is so important if you're going to make profitable decisions as a trader or an investor. So our solution to information overload is Chaikin Analytics. As Micah said, it's a fundamentally driven approach that keys off the Chaikin power gauge rating. But we've also added an integration with a module that we're licensing from a company called Options Play, to help options traders generate ideas in the same metrics-driven, probability-based way that we constructed the Chaikin Power Gauge. And we're going to show you examples in the webinar of current options trades that you could consider that I was able to generate today as I put together this webinar deck using options play. Now, when we found options play back in September last year, they weren't very well known, but now they're on the Raymond James platform. They're integrated or will be shortly into the Merrill Lynch Merrill Edge platform. They're used by thestreet.com. So they've gotten a lot of validation. I decided to license it rather than building it because I thought it was the best options program I had ever seen. And I ran an options department for 5 years at a regional firm. I'll give you a little insight into what I learned in that gig a little later in the webinar. So Chaikin Analytics leads to profitable trades because we give you a directional edge. And that directional edge is the Chaikin Power Gauge rating, which takes fundamental factors and technicals and folds them into a quantitative model that does all of the fundamental heavy lifting for you. It's something you just can't do on your own. Even if you knew which factors to look at, it would take you 2 hours, and we know this because we've gotten feedback from subscribers, to research just one stock thoroughly. And Chaikin Analytics does this for you on 5,000 stocks instantaneously. And then we've got those Chaikin buy and sell signals for better entries and exits. Now, I think all of you would acknowledge that we have seen the market volatility pick up here for a time, particularly after that breakout. We had about 8 weeks of sideways action. People got lulled into a false sense of security, and typically that ends to the downside, not to the upside, unless there's a big trigger to stimulate a buying stampede. So we got that sell-off last week. We broke through short-term support levels. We actually closed below and flirted with the breakout level of 2137, but we've recaptured that heading into tomorrow's Fed meeting and the comments from Janet Yellen after the meeting. So volatile markets demand a disciplined methodology. This pyramid encapsulates what we're trying to teach you in this webinar. At the top of the pyramid, Chaikin Power Gauge rating, unbiased 20-factor model, varies from very bearish to very bullish. We also like industry group and sector rankings, and we have a unique way of doing that, which we can't get into on this webinar because it would take too much time, but we do webinars that focus on that. We look at the number of stocks with bullish or bearish power gauge ratings, similar to what we did with the spider and the IWM. We call that the power bar. At the bottom of the pyramid, just 2 technical indicators. Now, I know Micah has given you access to a lot more and the ability to backtest it. MACD is a very popular indicator. As you'll see on the charts, we have an overbought, oversold indicator, which is a cross between a stochastic and an MACD. So we like MACD. I love Micah's implementation of MACD with his payday cycle and more, because he keeps adding rich functionality. In the middle, Chaikin buy and sell signals to help your timing. Even people who invest in dividend-oriented stocks can benefit from market timing, from more of an intermediate timing approach where you're not buying breakouts, you're buying dips. So timing can help options and swing traders, but it can also help conservative investors. Now, the Chaikin Power Gauge rating looks deceptively simple. Looks a bit like the gas gauge on your car, but please don't confuse simple with simplistic, because this is a very powerful predictor of a stock's likelihood to move up or down over the next 3 to 6 months and beyond. I like to say that the Chaikin Power Gauge rating is like a Chevrolet with a Ferrari engine under the hood. And during earnings season, which is how we're going to end the webinar, it can be your GPS, along with some of the other new tools in Chaikin Analytics, like our earnings alerts. Now, I mentioned that really successful traders and market educators have started to take notice of Chaikin, and one of them is a new partner called John Carter, has a company called Simpler Trading. He looked at the Chaikin Power Gauge rating, analyzed it with his team, and said, this is an objective, awesome meter for stocks. There's a lot of hyped up tools out there, but when I find something interesting, I'll let you know about it. So you can imagine that a single tool that combines 20 technical and fundamental factors to anticipate a stock's potential got my attention, and he calls this an objective, awesome meter for stocks, which includes fundamental and technical analysis plus timing. So what are those 20 factors that got John Carter so excited? Well, there are 20 factors that institutional investors look at every day to make their decisions. So I'm going to stick with my belief that institutional investors drive the market, and they look at fundamentals. Now, they don't all look at each of these 20. 85% of these are fundamental, 15% are technical, and they've got a proven track record over the last 5.5 years since they were introduced as a research product in January 2011 of finding winners and helping you avoid losers. Financial metrics are 35% of the model. They're the bedrock. They're the value metrics that a Warren Buffett would look at. Earnings factors are what Jim Cramer loves to focus on, particularly earnings surprise, and that becomes relevant during earnings season, which begins in early October. Now, this is one of the things I learned from one of my mentors when I was at Drexel Burnham in the mid-'80s. George Douglas had one of the great quantitative databases on Wall Street, and he did the original research on earnings surprise and earnings estimate revision. And I learned a couple of things from George. First of all, earnings surprises come in bunches. There's never just one of them. It's like the notion that you can't turn around a big ship in a small canal. You get earnings surprises up or down, and something's gone very right or very wrong with the stock. But most importantly, George determined that earnings surprises lead analysts to raise or lower their earnings estimates. And white papers subsequent to George's research have proven that earnings estimate revisions are the biggest single driver of short-term stock price movements. So this pattern is very important, particularly during earnings season. It can help you anticipate whether a company is going to report positive or negative earnings surprises. As we saw with Apple, it's not perfect. And we'll look at that, as I said, at the end of the webinar. The bottom line is, hi, Micah.
Hey, Mark, can I add something here real quick?
You bet.
I've been listening to you on this page specifically, and I just kind of wanted to highlight for everybody how important this page is. If you think about each one of these data points as time savers, if you were to go down this list and think about how long it would take you to calculate and research every single one of these data points, you're talking about something that has all of a sudden become impossible for you to do on your own. And if you're to kind of sum up the power of the Chaikin Power Gauge and what he's done here is really in these data points, just for this one insider activity, how long it would take you to go and research that. I mean, the fact that he's been able to put all 20 of these data points into one easy to use gauge, I think is really the magic of the Chaikin Power Gauge. And I just kind of wanted to let everybody know that this page, basically how important this page is as a time saver for you.
Well, thank you for that, Micah. And I might add that the reason the Chaikin Power Gauge works is because it's based on how Wall Street works. You know, whatever methodology you're using has to pass the smell test. If someone's showing you a black box, maybe it works, maybe it doesn't. But if you can see the factors that go in, there's a lot of transparency here. This is on our website, chaikinanalytics.com. Full explanation. We're coming out with we have an ebook that details each of the factors, which is free. So it's important that whatever methodology you use, whether it's fundamental or technical, makes sense, because it has to pass the smell test. Now, here's the performance of the Power Gauge ratings using the Russell 3000 as our universe. And this is actually current through the end of 2015. We're going to update this at the end of 2016. The very bullish stocks in the Chaikin Power Gauge methodology in the Russell 3000 have averaged a 20% annualized return since 1999, 17 years. The average very bearish stock has been down 1% even after a 7-year bull market. So think about that. This combines back-tested and real-time results. The curves are absolutely the same. In 2015, this became really important. Why? Because the very bearish stocks in the Russell 3000 were actually in a bear market. Over 40% of the stocks in the Russell 3000 were down over 20% in 2015. Now you look and you see that the Russell itself was only down 1%. How can that be? Because it's a cap-weighted index like the S&P 500. The average stock in the Russell was down 8%. But it's being able to distinguish between the very bearish stocks, like the fracking stocks, Range Resources, Kinder Morgan, the rails, which suffered mightily, many of the small cap stocks, and avoid them or use them as put candidates and focus on the very bullish stocks for your long trades. If you can just capture that differential, imagine what that could do for your trading profits. Find the winners, drop the losers. Turn the losers on their head and use them for put candidates. Now, 2 other proof points about the power gauge, and then we'll get on to the meat of the presentation on how to use it, how to find them. We have 2 partnerships, one with Nasdaq and one with First Trust Portfolios. Nasdaq came to us in April of 2014 and said, we've evaluated the power gauge rating, stress tested, and we like it. And we'd like to partner with you and want you to take 3 of our indexes, large cap, small cap, and dividend achievers, use the Chaikin methodology and the power gauge rating to create a subset of these index components, and they're called the Nasdaq Chaikin Power Indexes. The goal was to see if they could outperform the benchmarks, because in essence, that's what we try and do every day. But there was one proviso. You had to hold these stocks for 12 months because the benchmarks only get reevaluated once a year. So that took us beyond this 3 to 6 month time window that we were comfortable with, but the results have been spectacular. The Dividend Achiever Index has outperformed its benchmark by over 1,000 basis points in 2.5 years. The small cap has outperformed by 982 basis points, and the large cap has outperformed by about 50 basis points. Our goal was to get ETF creators to license these Nasdaq Chaikin indexes as the basis for ETFs. And we're in deep discussions on that right now. But First Trust Portfolios came to us in October of 2015 and said, we've been evaluating a portfolio you sent us for 10 months, and we think that this could be the basis for a unit investment trust. So 6 weeks later, First Trust Portfolios, which is the largest creator of unit investment trusts that you could only buy through your broker or advisor, rolled out the Chaikin Low Beta Growth Portfolio Unit Investment Trust Series 1 with no brand recognition or name recognition within the First Trust wholesaling arena, with very little advisor knowledge about Chaikin. They've raised over $50 million, and there are now 4 series. The last one rolled out on August 29th, and all 4 of these First Trust unit investment trusts are outperforming the S&P, which is their benchmark, with a lower beta because they're meant to be low volatility. Why is this slide important? Because it validates from an index point of view and with real money the fact that this methodology that we're going to be talking about right now has delivered alpha. It's delivered results. Now, if you're an options trader, you may be thinking, well, how does this pertain to me? Well, the reason it pertains to you is that the stocks that we call classic bulls, which are likely to outperform the market over the next 3 to 6 months and beyond, also give you the best short-term bang for the buck. So if you're swing trading or using options on the long side, you want to be in the strongest stocks, and the Chaikin methodology is really simple. Bullish power gauge rating, which means that the fundamentals are on your side. Stock is outperforming the market. That's absolutely critical because now you've got the market validating the model, and Chaikin Money Flow is green, not red, telling you that the institutions are buying the stock aggressively. In this little thumbnail, we've got United Health, which had been our poster child for the very classic bull pattern. It's now seeing some profit taking, and the power gauge has turned neutral. So let's look at Tyson Foods, which happens to be one of the stocks in 3 of the 4 Chaikin Low Beta Growth Unit Investment Trusts, as was United Health. So the computer found this stock. I didn't pick these by hand. The computer generates these portfolios using a set of rules that we built. So here's Tyson Foods, mundane company, chicken business, food business. But it's a classic Chaikin bull because for most of 2015 and into 2016, the power gauge rating has been bullish, just turned bullish again yesterday. The stock has been outperforming the market, and Chaikin Money Flow has been strong. So this is your classic Chaikin bull. And up here, I've shown the oversold buy signals, which were really good entry points. Even this one in late December showed a nice profit a month later. And when the market made a new low in February, Tyson's was far off its low of January. And then this one worked out beautifully. These oversold buy signals work about 2 out of 3 times. We had another one right here on that 2-day sell-off that we had a week and a half ago. That's working out nicely. And then we had a relative strength buy signal, which I'll explain in a bit, coming into today. The bottom line is these are the stocks you want to find and trade to the upside. There are times to exit these stocks, and typically it's when they spike up to the upper band after an earnings report that you get a great profit-taking opportunity, particularly when Chaikin Money Flow has not responded. And we're going to teach you that pattern in a minute. That's a $1 million pattern that we've been teaching the pros for over 25 years. Now, the flip side is the classic Chaikin bear. These are the stocks you want to avoid. Get them out of your 401k plans. Use them as potential put candidates. So it's the mirror image of the classic Chaikin bull. Power gauge rating is bearish, meaning the fundamentals are stacked against you. Relative performance to the market is weak. And Chaikin Money Flow is red, not green, indicating that the institutions are selling, not buying. So here's CF Industries, one of the largest fertilizer companies in the world. Power gauge rating has been bearish for over 18 months. This is one of those stocks that you really wanted to be out of in 2015 going into 2016. Chaikin power gauge rating at the bottom, this is a 1-year chart, has been bearish for 12 months or more. It's been underperforming the market. What we like to say is the market is agreeing with the model. That's so important because no matter how good your fundamental analysis is, if the market disagrees with you, the market always wins. At best, it's dead money, and at worst, it's a stock like CF Industries, which sold down from 53 all the way to $22. And there were sell signals along the way, relative strength sell signals. This is a really important pattern. The reason is the time frame on the oversold buys, 5 to 10 days. They sync up very nicely with Micah's payday cycle. The time frame on the relative strength buy, which actually doesn't care about the power gauge rating, it could be neutral, keys off our relative strength indicator. The signal is really simple. Stock that's been underperforming the market rallies above its 21-day average, 21-day exponential, and then drops below it. When it drops below it, you get a Chaikin relative strength sell signal. And we see a number of these. The reason this is important for options and swing traders is this signal has a time duration of 4 to 8 weeks. So you can take longer term options view on the stock. You can buy in the money options, knowing that you're going to get a delta that's close to 1 to 1 or 0.7 to 1, and ride out some of the swings so you don't have to necessarily cover at the lower band on that first touch. You can wait for the second wave down. And this has happened over and over again. 2 years ago, Wynn Resorts was our poster child for classic bear, dropped from 200 down to 60, now turning around. Last year it was Kinder Morgan. Stock dropped from above 40 to $12. Now it's CF Industries. These patterns repeat over and over again, and you can find them. And notice that the institutions are still not buying the stock. The selling isn't as intense as it was back here in December, January, but the Chaikin Money Flow is still red most of the time, meaning that the institutions are not buying the stock, they're selling it. Now, how do you find these stocks? When we first rolled out this product in January of 2013, Chaikin Analytics, people said, well, this is all nice, but how do I find them? So we added hot lists to the system, and then we added alerts. And this is an example of the Chaikin hot lists. It's part of our list manager. I've got a list called My Stocks. That's in the background, ranked by the Chaikin Power Gauge rating. It's about 150 symbols, way too many for you to follow. But because I do these webinars and write a market letter called Chaikin Market Insights and blog and tweet on stocks, I want a rich pool of examples to pick from. On top of that, I've overlaid a hot list we call Power Gauge Hot Lists. You can see all of the bullish stocks and filter them down using a global filter. You can see the very bullish stocks separately because they sometimes give you outsized performance. You can see which stocks turn bullish or bearish this week. So 74 stocks have turned bullish this week, whereas no stocks have turned bearish. So that's a positive for the market. That's just one way to find bullish and bearish stocks in Chaikin Analytics. Now, there are two patterns that we think are so powerful that we put a name on them, actually three. The first one we call the dynamic duo, and you've already seen examples of the Chaikin Power Gauge rating combined with Chaikin relative strength. The dynamic duo finds big winners and losers. And superior returns historically have come from stocks that were outperforming the market because they tend to continue to outperform. Now, one caveat, relative strength does stand alone as a bullish or bearish indicator. Now, what that really means is that momentum stocks very often are not supported by fundamentals. So the power gauge will be bullish, and you can make a lot of money in momentum stocks, as we're seeing with Apple right now. But in the main, the combination of Chaikin Power Gauge rating and Chaikin relative strength that we call a dynamic duo finds stocks that are going to accelerate to the upside or the downside. So here's an example of one, HII, Huntington Ingalls, in the Aerospace Defense Group. Starting in November of 2015, both the power gauge and the relative strength were positive. You can see the second pattern we're going to describe right here when the relative strength went from red or underperforming to green or outperforming. Now we look back, I see some questions. Yes, Jim, this is proprietary, but we look back over 26 weeks, similar to what Investors Business Daily does, but instead of outputting this as a number from 1 to 99, which I think contributes to information overload, we've turned it into a red-green heat map. So money flow strong, classic bull, starting in November of 15. The stock goes from 130 to 172 in a market that was having trouble, as you remember, breaking out to the upside. So nice uptrend, great money flow, dynamic duo strong. And then look what happened. After they reported a positive earnings surprise back here in late July, the stock spiked up, made a new high, and look at Chaikin Money Flow. It was red, not green. It's one of those rare opportunities, except they're really not so rare, in the stock market to actually get out of a stock at or near its all-time high, taking your profits, letting someone else worry about the next move, and then that heavy selling was reflected in the Chaikin Power Gauge, which went bearish twice in here in this 165 area. So you could have gotten out at above 170, certainly wanted to be out of it if you had bought it back in here on any of these buy signals. in the 165 area, and lo and behold, today the stock was breaking down to new lows. Now, I've been using HII in webinar decks now for over 4 months. First on the upside, and then when I saw that pattern that we're going to describe to you, we call it stealth distribution. And here's the stock down 3% today, earlier today when I pull this chart, trading at 150. Breaking the pattern of higher highs and higher lows. Edison is very sorry. It was a darling of the solar energy group. I believe in solar. I think it's the future of energy in America. Carbon fuels are clearly not good for the environment. And Edison was being recommended by firms like Merrill Lynch, who had a buy recommendation on this stock in the 25, 28 area. As it was moving up to new highs above 30. But look what was happening to Chaikin Money Flow. Another example of where Chaikin Money Flow gave you a tip-off about the future direction of stock price movement. But since we're relying on fundamentals, while we might have sold it up there, we certainly were forced to take a much closer look here in mid-July when the stock broke down to around 28 and the power gauge rating went bearish, followed 2 weeks later by the relative strength turning bearish. There's your dynamic duo on the downside. The market is agreeing with the model, and you tend to get price deceleration. And here we see a series of negative earnings surprises with some signals along the way at $10, then again at $5, proving that it's never too late to sell a stock where everything is stacked against you. Ideally, you would have sold it up here in the 28 area, 25 and 28. And the sad reality is that Merrill Lynch stayed bullish on this stock all the way down, finally throwing in the towel at $3 back in February of 2016. And notice that this chart ends in April. Why? Because the company filed for bankruptcy. We got this testimonial after meeting Edward M. at an Options Industry Council conference where we exhibited and sponsored in Tiranaya, beautiful resort in Southern California. Ed came up to our booth just as we were showing another advisor an example of how Chaikin can help you avoid disasters. And I used SunEdison as the example, and he just about fell off his perch when he said, I bought SunEdison at 15 on the way down, which my firm Merrill Lynch was still recommending. If I'd been using Chaikin, I would have saved a lot of pain and money for myself and my clients. Edward's an advisor with Merrill Lynch in Philadelphia by coincidence, where we're based. And he gave us that wonderful testimonial. Now, the second pattern that we really think is important for you to come away with from this webinar is the concept of personality changes. I believe spotting personality changes is the key to making and keeping profits. And we define a personality change very simply. Stock that's been outperforming the market starts to underperform, and we make it really easy. Can you see how easy it is using this smooth relative strength indicator to see when a stock has changed character? Now, why is this important? The reason this is important is that the worst thing you can do in the markets is to put your feet in cement and not recognize when the market is starting to change character in a given stock. So here's an example of a stock in the small cap sector, which we know is outperforming because of the IWM analysis, that had a bullish personality change back in February. It came out of this base, broke above our long-term trend line. The power gauge was already bullish. Excuse me one second, we've got allergy season here in Philadelphia. And then the stock started outperforming the market. It was $10 a share on its way to 29. Now, as I'm going to show you in a minute, my wife Sandy did a webinar that Micah kindly hosted for the Wall Street IO community right as Brexit was happening on June 23rd. And she actually bought Quad Graphics on that pullback where the green arrow is. But here, what we're seeing is the need to recognize when a stock is changing character. Because if you were bearish on Quad Graphics, you might have had puts, you might have been short, you might have been out of the stock, but not thinking of it as a long candidate. When you see this bullish personality change accompanied by Chaikin Money Flow, you want to seriously look at those next couple of buy signals. These are oversold buys, worked 2 out of 3 times. Actually, 4 out of 5 worked on this chart. We just got another one coming into trading today, and earlier today the stock was up 2.5%, responding to that oversold buy. It's been in a 3.5-week corrective phase. Power gauge is still bullish, still outperforming the market. Very little selling pressure on that. This is a stock to watch. Now, this is a screener that my wife Sandy, who teaches her methodology very similar to this, used in her webinar presentation to Wall Street I/O based on a screener that she ran on June 22nd for the June 23rd webinar. And using strong industry group as the basis of her screen, she was looking for stocks with a bullish power gauge rating that met her criteria. The 3 factors in the model that she looks at very closely when she wants to dive deeper. And one of the stocks she found was Quad Graphics at 21.53. She bought it. It moved all the way up to 29. She took some nice profits along the way. Sandy tends to swing trade smaller cap stocks and try and find large cap stocks to hold for the intermediate term because she feels more comfortable with that lack of volatility and knowing the companies better. So she's been in stocks like Skyworks in 2014 into 15 and Southwest Air and eBay before that and Comcast. So her methodology is a pretty good one. And it's interesting because she's new to trading and investing. Used only mutual funds up until 3.5 years ago. She's a really good stock picker because she keeps it simple and uses Chaikin methodology of classic bulls and classic bears and the screener to find them. Now here's an example of a stock with a bearish personality change back in February. It's a name we all know, Starbucks. Great coffee if you like it strong and aromatic, but the stock has gone nowhere since you had that bearish personality change. Power gauge has also been bearish. This all happened with the stock in the 58, 59 area. You had a sell signal up here at 60. And look what the stock has done. It's gone nowhere as the market has been making new highs. The last overbought sell signal came at a price of about 57. Analysts, for whatever reason, were touting the stock in barons. The company said they were going to increase their dependence on tea. They own Teavana, and that's going to be major for their Asian rollout. Well, the market doesn't seem to care about that. So let's say you think that Starbucks is a stock that may make a new low. Either the market might go down. I don't think it will, but certainly Starbucks isn't trading with the market. Let's say you think Starbucks has the potential to make a new low around 50. Using our options play ideas generator, I clicked on options up here on the chart earlier today, and options play will always give you 3 choices. You can sell the stock short, you can buy a put outright, or you can buy a vertical put spread. Now, how many of you know what a vertical put spread is? If you do, type a big V in the question box, please. So what options play zeroes in on are probability-based trades, and in this case, all 3, which is very unusual, are circled in green, which means they have a high probability. But the one with the biggest score based on implied volatility and expected price movement, none of which you have to get into, is to buy the 54 put expiring on October 28th, right ahead of earnings on November 3rd, and to sell the 50 put against that. That creates the vertical put spread. The total cost, $125. to have a bearish put position, the equivalent of being short 100 shares of Starbucks for only $125 with no margin calls, and your profit potential is 200% return if Starbucks trades below 50 between now and August 28th with an earnings report due out on November 3rd, that's probably not going to be very good. Now, closer to that earnings report, you might want to buy it out of the money put option depending on where Starbucks is. And typically, stocks like Starbucks will rally ahead of earnings because Wall Street is ever hopeful. So that's an example, as we promised you, of how to use Chaikin power gauge rating and options play to find high probability options ideas. Now, the last pattern we're going to teach you, you've already seen in action. We call it stealth buying and selling, and we monitor that with Chaikin Money Flow. The reason this works is that institutions are so large that they fly under the radar screen, and their orders have to get executed over a number of days or weeks, and they leave tracks when they do that. So we've already seen how Quad Graphics is a stock that our screener picked up, but when it broke out in February above the long-term downtrend line, it went sideways for about 5 weeks between mid-February and the end of April, actually 8 weeks. Look at the Chaikin Money Flow. Never went negative. Remember, that's based on a 21-day look-back period. So it's 21-day average of the single-day money flows. And in the midst of that, you got 2 oversold buy signals. We call that stealth accumulation. If people were genuinely selling that stock, money flow would have gone negative like it did back here in November and January. And money flow has stayed positive the whole way, except for the small negative tick here. And we got our oversold buy signal coming into today. Now, McDonald's is an example of stealth distribution. It's this pattern that's extraordinarily similar to HII. Now, remember I said that relative strength stands alone as a bullish or bearish indicator. Here's the perfect example of that. Power gauge was not bullish. The factors were negative, but the stock went into a steep uptrend, and there was a lot of money to be made following McDonald's when it was outperforming the market with positive money flow. Just be aware that if the power gauge rating is not bullish, and you're in a momentum stock like McDonald's, which was going from 95 or 90 actually to 130, you're on a high wire without a safety net. And that fall off the high wire can be painful financially and psychologically, especially if you don't spot the personality changes. So what happened to McDonald's? Well, after a positive earnings report back here, and there have been a series of them, remember I said earlier, earnings surprises come in bunches. The stock spiked up to a new high near the upper volatility band. But look where Chaikin Money Flow was. It was negative. Now, do you think the institutions were buying that stock or selling into strength? And I'm seeing some comments that they were clearly selling into strength. So who was buying it? Well, it was the public being hyped by Wall Street on CNBC. The CEO's turnaround plans are working and so forth. Great spot to have sold the stock at 130. Again, one of those opportunities to sell a stock, clear out your position, take profits at or near a new high. But then what happened is the power gauge turned bearish in early May. The stock started underperforming the market. There's your bearish personality change. Money flow stayed negative. So if you didn't sell it up there because you were greedy, even though Chaikin Money Flow was negative at the new high, you certainly would have sold it at 125 if you believe in this methodology, this discipline of avoiding the losers and finding the winners at 125. And the stock has traded down to 115. There was a gap down with a disappointing guidance in their last earnings report. But you could have been out of it between 125 and 130 as it was heading down to 115. If you liked fast food, you could have bought Jack in the Box instead. Now, Jack in the Box had been underperforming the market until they had a positive earnings surprise back here in May. And the stock spiked up and the power gauge turned bullish as a lot of Wall Street analysts turned bullish on the stock. And then it started outperforming the market. So you could have been buying Jack in the Box with your McDonald's proceeds at 75 on the way to 100, while McDonald's was going from 130 down to 115. Wall Street is all about choices. Trading, investing are all about choices. There are 5,000 stocks to buy. If you like fast food, you think that the demographics are good, this Jack in the Box gives you both Mexican and hamburgers, you might have bought that pullback, that oversold buy signal with positive money flow. There's your stealth accumulation pattern, and gotten in or re-entered the stock at around 82 on the way to 100. So this stuff works. Our subscribers, Wall Street IO subscribers, have been using this now for over 2 years, and you're constantly finding opportunities like this. Now, I talked about buy and sell signals. We've got 6 pairs of them. We've looked at overbought, oversold, and money flow signals, relative strength signals. These are all on our website. We explain the conceptuals behind these. So I know you've got great signals from Micah. Follow them. But if you want to dive deeper, look at the signals on our website in Chaikin Analytics. So the reason to follow any proven signal is that a discipline based on proven analytics, A, gives you conviction to pull the trigger, which is important, and B, is a lot better than trading on your emotions. So here we're using a stock called Varian Medical in the very strong medical products group, a series of oversold buy signals. This one came about 3 weeks before a very positive earnings surprise. Notice that the company had had 2 earnings surprises in a row. Here's your third. Spike up to new highs, sideways to down. That's your spot to get in. You don't want to buy that breakout. And then more new highs yet to come, with money flow getting even stronger and all 3 components of the classic bull in place. Now, again, the question is, how do I find these signals? So we've created dashboard alerts in Chaikin Analytics, and this is what the dashboard looked at for my stock list today, coming into today. These are all based on the previous night's close. So I had a series of buy alerts. One of them was on eBay, and then there was a sell alert on Nike. So let's look at a couple of those charts. Here's your chart on eBay. Again, positive earnings surprise. Power gauge was already bullish back here in late June, followed by better than expected earnings and a big spike up. You don't want to buy the stock, a spike, you want to buy the pullback. So here's your oversold buy signal back in August, and now another oversold buy signal that we just saw on today's dashboard. Company reports earnings on October 19th. Expectation is better than expected earnings. Nike, on the other hand, is going nowhere. Had a big bull run. The stock split, got up over 100. And now the power gauge is bearish, has been off and on since February. It's been underperforming the market. There's your bearish personality change. So if you were bullish on Nike, got to be aware that the tides are changing. And we had a series of relative strength sell signals, including one coming into today. So this stock is dead money, and there are better places to be. Just an example of how you can find the winners and the stocks to avoid in Chaikin Analytics. Now, at this point, I'm going to turn the webinar over to Joe Bacella, who's going to switch to our real-time desktop app and show you a screen that I developed for this webinar based on a webinar that Joe Bacella and Dan Franz in our customer support and sales department built for a July webinar. I modified it slightly to reflect my biases. So Joe, why don't you take over and
Great.
run the screener through its paces for everybody.
Awesome. Well, thanks everybody for giving me your time to check out this presentation. So, as Mark mentioned, there's a number of different ways that you can find specific stocks, an ideal type of setup, those personality changes, or perhaps if you're looking for that stealth accumulation by way of institutions. So to access our screen, it's really pretty straightforward. Right at the top of the page, once you're finished navigating through a few stocks, maybe, for example, if you're analyzing a great classic bull like Cisco Systems, if you're looking for more examples like Cisco, what you can do is just simply access the screener at the top of the page. And within the screener, you'll notice on the left-hand side there's a variety of criteria. Now, like Mark just mentioned, I'm going to go ahead and pull up Mark's preferred screening criteria. And it all starts really right up here at the top of the page, or where you define your stock universe. So what we're going to do, we're going to go ahead and pull up our universe, and we're going to really look for growth opportunities. We're going to look just for growth stocks. And of course, with our power gauge rating, as you can see by now, when we're looking for growth, when we're looking for that great bullish momentum, we absolutely must have a bullish power gauge rating. Now, what I'm going to do, just for example purposes, I'm going to go ahead and actually run the screener right now. Because what I like to do as we're going through our screeners, I want to pay attention to just how many stocks we're kind of pegging down. And you'll see within Chaikin Analytics, of all the growth stocks, I'm noticing nearly 1,700 stocks. And of those 1,700, nearly 365 of them have a bullish or a very bullish overall power gauge rating. And that's great. So this gives me plenty of options to dig through. However, of course, 365 is, as you can imagine, way too many for any one of us here. Certainly not myself, certainly not Mark. So we're going to go ahead and fine tune this a little bit more, and we're really going to drill down within those 20 specific factors. Now, these are the two that Mark really must have within his screen. So you'll notice within this section over here called factors, I can drill down a little bit more. So what we're going to do is we're going to go ahead and drill down for the estimate trend, which falls under our experts category. So I'm going to make sure that the stock that I'm looking at, that I'm considering buying or buying a call on, I want to make sure that its upcoming estimate trend has a strong rating. All right. Now, on top of this, I'm also going to make sure that one of those most important factors here under financials, free cash flow, also has a strong bullish overall rating. So we started out with 365 overall stocks, and notice that once I peg down estimate trend and free cash flow, I'm down to 66. So obviously we're doing work. We're really drilling down within those specifics.
Now, Joe, let me just point out to everybody on the webinar that these two factors, estimate trends and free cash flow, reflect what Warren Buffett looks at, which is free cash flow, and what Jim Cramer looks at. So we're really sort of modeling a combination of Jim Cramer and Warren Buffett, and also using the filter up on top, you can sort of filter out certain stocks that have characteristics that you don't like. So Joe, why don't you show people that?
So here's my global filter. Now, the global filter allows us to have a lot of flexibility. And if I turn on my global filter, I can set my preferences based on a stock's current price. So I'm going to factor out, in this example, anything with a price of $6 or less is not going to show up in my screen. And the same.
So why don't you make that 15? I think that's what I used to develop this, and 50,000 for the volume. You're going to be a little too restrictive. That's good.
50, and how about market cap?
500 million.
500 million, and we'll go ahead.
Small caps are good, and also if you're an options trader, you can require that they all be optionable. So let's turn that one on.
Beautiful. Here we go. So we'll go ahead and hit save here, and when I screen, down to 49. So now let's go ahead and get really specific. Now, there was a great question from one of the attendees just a few minutes ago who mentioned, the question was, would I ideally like to wait for the power gauge rating to be bullish, relative strength to be positive, and money flow to be positive? And to answer that question, absolutely. So let's go ahead and put some of that into play here. Now, my price level, I'm going to look for a short-term oversold position. That's my ideal time to spot some short-term momentum. Now, adding on money flow, again, that institutional behavior. If institutions are spotting it, if they're buying it, ultimately I want to get a part of that momentum as well. And then, of course, we're here to beat the market. We're not here to just trend and go average with what the overall S&P is giving us. So I want to make sure that when I'm drilling down within relative strength, I want to find a stock that's achieving our goal and it's beating the market. And so when I screen and overall I apply all this, I'm down to simply 14 stocks. And if you take a close look at some of these ticker symbols, right, you'll see that you'll have a few familiar names. Tyson, we've already looked at. Mark highlighted this. Quad Graphics, we saw already. Now, what I'd like to do, here's another familiar name, eBay. Now, what I want to do is I want to drill down within one of these stocks here, Synoptics. Now, this is a stock that I've been focusing on for the past few weeks. And what I'll do to take a quick look, I can either click on the word results here, or in fact, what I'm going to do for this list is I'm just going to click on Save List. And these will be Joe and Mark's bullish stocks.
You probably want to do that trick that you taught me, Joe, and put the dots in so it shows up at the top of the list. I learned that from you.
We learn a lot from each other. So what I do there is if I put a period in front, notice how alphabetically speaking, it was right to the top of my list. And so with that in mind, here are those 14 stocks. And if I wanted to take a close look at Synoptics, for example, here, let me rearrange my screen a little bit. What do we notice? Everything aligned in a perfect classic bull manner. So from a Chaikin Analytics perspective, notice here, what are those two factors that I drilled down within? My free cash flow here, right, has a strong rating. And my estimate trend, also with that strong rating, all of this falling under the roof of an overall very bullish rating. So the stock here, again, above its long-term trend. I can see that Chaikin Money Flow over the past month, right, since about the middle of August, a really, really strong condition. Relative strength, again, another thing that we screened for, pretty undeniable here, pretty straightforward, overwhelmingly positive. And we're looking at this at the right time. It's right down here in an oversold position. So just a great example, a great way that you can find trending stocks that not only have already done well, but with the guidance of the power gauge rating, giving you the directional edge, telling you that there's growth likely to continue here.
That's great, Joe. And why don't you just show people how you can save that screen, and then I'll take back the dry part of the webinar and the PowerPoint deck.
Excellent. So with this list, the great thing about this is when you save this list, the beautiful thing about Chaikin Analytics is that this list will be here for as long as you'd like it to be. So perhaps if you're digging through your own My Stocks list, or maybe if you're going through any other list that you've created, you'll notice that what I have here, since I've already saved this, I can reference this at any time. I can keep tabs on its overall performance. And again, it's just a great way to make sure that you're staying on top of stocks that are trending.
But Joe, why don't you go back to the screener and show people how you can actually save the criteria and have multiple screens that you've already saved.
My mistake. There you go. So for the criteria here, right? So we went through a number of steps to save this. All I need to do at the top of the page here is you'll notice that there's a little portfolio icon. If I go ahead and simply click on that icon, you can see the pop-up that appears, Save Screen. So I'll go ahead and save the screen. And I'll go ahead and call this Mark's Screener Criteria. Hit enter on my keyboard. And now if I ever wanted to pull this up very quickly, I can just go ahead and click the drop-down menu, load screen, and here's Mark's Screener Criteria. So making my life much easier.
Yeah, that's really fabulous, Joe. And I can't tell you how this really enables you to customize Chaikin Analytics for your particular biases and find stocks that work for you. So I'm going to take back the screen, and I think this is, well, that's not what I'm looking at. I have trouble doing this, so I've got to get the deck back, and here it is. So that's an example of the screen that Joe just created for you, a snapshot and the Synaptics chart. Synaptics actually gapped up on the opening today. We have an intraday capability now. We didn't have that back in March when we did our last webinar, or in June when Sandy presented. So we now have intraday updating bars, and we have alerts. So there was an alert that the stock gapped up on the opening. Didn't do it on heavy volume though. So here we see the intraday chart at around 1 o'clock, with the stock having spiked up to almost 58.70 or 58.91, and then selling off on some profit taking as the market awaits the Fed tomorrow. So playing good defense is really important, because it's the stocks you don't own that matter. Herb Greenberg, who wrote for CNBC.com and Street.com said that in January of 14. Nothing could be more true, because playing good defense helps you reduce risk by avoiding mistakes, avoid weak industry groups, know what stocks not to buy, because you improve your performance by eliminating potential losers. And you can also use put options to protect your portfolio or profit on the downside. So here are some examples of stocks that you didn't want to own in 2016. Chipotle, fast food, E. coli, bad combination. Power gauge was bearish even before E. coli, and even before that bearish earnings surprise. Power gauge turned bearish at 700. Relative strength turned bearish 3 days later. That's your clue to get out of the stock. The party's over. Personality change, fundamentals are stacked against you, and sure enough, negative earnings surprise. And then back here, the E. coli problem surfaced. And we had some sell signals in here that could have helped you time a put entry, and certainly reinforced the notion that at 600 you had to be out of the stock as it was heading down to 380. And along the way, we've had some of those relative strength sell signals. This one worked with a negative earnings surprise. Again, negative earnings surprise. This was more tricky. So you've had some tricky action in Chipotle. You had a negative earnings surprise, and yet the stock rallied. But then it sold off from 440 all the way down below 400. And an activist hedge fund manager, Bill Ackman, announced that he owned 9.9% of the stock. And it spiked up almost 8% that day. And we alerted subscribers in our Twitter posts for non-subscribers that this was a phony baloney move. And sure enough, the stock peaked at around 438 and back under 400 again. Power gauge has stayed bearish the whole way. So the power gauge will help you from making the mistake of bottom fishing until there's some confirmation from the fundamentals. Here's another stock that you wanted to avoid based on the power gauge methodology in 2016, Tesla. Now, it's a cult stock. And the cult leader, Elon Musk, has mesmerized Wall Street. Now, Tesla is not the only company making electric cars or self-driving cars. A lot of competition. Chevrolet is coming out with the Bolt. Mercedes, BMW, proven car makers are building the same stuff that Tesla is telling you is going to take over the world. But if you believe in the power gauge rating, you're not taken in by the hype. And there have been a series of negative earnings surprises. Tesla is burning cash. So my advice is drive the car, sell the stock. And here's another reason why Tesla is vulnerable, because in a sweetheart deal to save Solar City, which Elon Musk controls, Tesla is trying to take over Solar City. Now, obviously, investors don't believe that's going to happen because the stock wouldn't be down here at 15. It spiked up on the news, but the power gauge is bearish, relative strength is bearish. Solar City is contributing to the problems that Tesla is going to have going forward. Solar City is burning cash faster than Tesla is. Why in the world would you want to take a flyer on a stock like this? And I noticed some very fundamentally oriented blog posts who I respect actually recommended Solar City. I just boggles my mind. Sure, it could work out, but they're burning cash. They're raising money right and left to try and put the finger in the dike. It's an example of a stock you don't want to own. Now, let's say you believe, as the power gauge is telling you, that Tesla is likely to drop, and you want to participate on the downside. So the stock, when I pulled this options play ideas module, was trading at 205.75, and options play circled the vertical put spread. Vertical put spreads tend to put the odds in your favor because they're cheaper than buying a put outright. So it's saying buy the 207.50 put expiring on October 28th. That's right ahead of the earnings. And sell the 182.5 put against it. Total cost $890. If Tesla drops to 182 from 205, you'll make 180% on your money. You're short $20,000 worth of Tesla. You know what your risk is, $890. Vertical spreads are what the pros use to put the odds in their favor because they're cheaper than buying the outright put or call. So here's an example of taking the power gauge rating and finding an option strategy to match that rating. Now, if you were bullish on Tesla, you could click I'm bullish and you would see 3 bullish strategies, but I don't think they would have green circles around them. So we're going to end the webinar, except for the Apple analysis, by showing you the timing secret that really does produce huge returns. And we know this because we've seen it in action for over 3.5 years. You find the bullish and bearish stocks with the combination of the power gauge rating and relative strength. You use our earnings surprise factor and our new earnings alerts to know if a stock is likely to beat or miss, never a certainty. Then you can supercharge your profits with options during earnings season using Chaikin buy and sell signals to time your entries. So let's look at some examples of that. Well, this is one I really love because Urban Outfitters is based in Philadelphia, and it's had its trouble gauging the consumer in their stores and what they're buying this season. Just before they were due to report earnings on August 15th, after the close, someone on thestreet.com wrote an article saying, take profits in Urban Outfitters now, ahead of the earnings reports. The shares have risen 27%, currently trading at 31. Now, what actually happened was that Urban Outfitters did just what our earnings surprise factor said it would likely to do. It beat estimates. So the article the next morning is Urban Outfitters, or that evening, Urban Outfitters is surging after trouncing expectations for earnings and sales. Urban Outfitters jumped 11% in pre-market trading on Wednesday after the company reported, actually traded up 17% that day. Here's the intraday chart from that day, gapped up. And after a period of consolidation, still doing quite well. So our earnings surprise factor, which is one of the 20 factors in the model, and our earnings alerts can help you find the stocks that are likely to report positive or negative earnings surprises. So let's look at another bearish stock. It's currently neutral, but the factors are bearish, which is Netflix. We had the ideal put setup ahead of earnings here in April. Had a overbought sell signal. The stock disappointed. It dropped from 110 all the way to 85. Great put trade. A little more challenging here. The signal came and the stock rallied into earnings, as it very often does. It did it here, and it did it again, and it disappointed, and it dropped from just under 100 to 85. These are very profitable put trades. Now, up here, we see that the next earnings report on Netflix is Monday, October 17th. And our earnings alert gives you a little green arrow because this earnings report was deemed to be positive earnings surprise. I can tell you that looking back over the last 5 years, in the last 4 October quarters, Netflix has disappointed and had big, sharp gap down price response. Here's an example of that. October of 2014, we actually put out a sell signal in a Twitter post and in our weekly market insights based on this overbought sell ahead of earnings. Now, I like to put on the trade as close to earnings as possible because you see that stocks like Netflix, even when they're in a downtrend or have a bearish power gauge rating, wishful thinking takes over and people ever hopeful buy the stock and shorts cover ahead of the earnings. Using Chaikin power gauge as your GPS, you can be on the right side of these trades. People who bought out of the money put options made over 50 times on that trade. And JV, who was an Apple trader, had just added Chaikin Analytics and said, using the upcoming earnings ideas in Chaikin, Netflix had a very bearish rating, bought 3 put contracts before earnings on 10/15. This was back in 2014 for $22.20 and sold them the next day for $93.90, a quick $21,500 profit. So here's a perfect example of how the combination of Apple Trader and Chaikin Analytics pays off. And this goes back 2 years, and it's been paying off ever since. So here's another example of an earnings play, PVH. Back here in March, Street.com was bearish on it. God, I love Jim Cramer. He's talking about Chaikin Money Flow as we speak, or on Mad Money in about a half hour. They were saying to sell PVH ahead of the earnings, same as with Urban Outfitters. But the Chaikin Power Gauge was bullish. The earnings surprise factor was positive, and it had a series of positive earnings surprises. And look at the Chaikin Money Flow. Would you have sold that stock ahead of earnings? Well, positive earnings surprise, spiked up, kept going to new highs before it pulled back. Remember, earnings surprises come in bunches. So 3 months later, what happened? Positive earnings surprise, spike up to new highs. And yet again, in August. Now, this is, again, one of those stocks that the computer found for the First Trust Unit Investment Trust. That's why these trusts are outperforming, because they tend to get into stocks like PVH and Tyson's and United Health that have a propensity to report positive earnings surprises. Now, here's 2 examples taken from January where you had an earnings report after a sell signal in Chaikin. In this case, a reversal sell signal. Stock goes above a short-term moving average, think 8-period exponential, and drops below it, has a bearish power gauge rating and negative money flow. LinkedIn dropped from 200 to 100. It dropped 50%. And we highlighted LinkedIn and the next stock we're going to look at, Tableau, in our weekly market insights as stocks that were vulnerable going into earnings season. Now, after that 50% move to the downside, LinkedIn was going nowhere until Wall Street's version of a rich uncle, Microsoft, came in with an outrageously rich cash bid at 190 for LinkedIn. But you would have taken your profit, obviously, on that 50% down move. Now, here's a stock that didn't have the benefit of a rich uncle. Same reversal sell signal. This one came 2 weeks ahead of earnings. Same 50% drop on the exact same day that LinkedIn reported. Tableau software, cloud computing, and big data, 2 hot concepts. But look at this pattern of negative earnings surprises. Without the rich uncle, the stock is going sideways to down. And that's where LinkedIn would have been, in my opinion, without Microsoft stepping up with that bid. Now, we got this testimonial from Torsten back in June, 400% return in 2 weeks. My first 2 weeks using Chaikin Analytics, I have to say the trades I found were really impressive. Call spread in AMD and a Google put spread. Now, what's interesting is we never mentioned those stocks in any of our webinars, in my market letter. Torsten found them using the same tools we've been showing you in the same methodology, because it does deliver what it promises. So I promised you that we'd look at Apple to end the webinar. And clearly, the analysts got it wrong, because nobody was anticipating a positive earnings surprise back there in July. And that's just what you got. But the power gauge rating didn't turn bullish. Back in April of 2015, the analysts were fooled, and the stock spiked up on a positive earnings surprise, but the power gauge actually did turn bullish. Now, why is the power gauge bearish? Well, if you drill down, the experts are still bearish on Apple. They're lowering their estimates. There's some insider selling going on. There's a nice short position. And so you've gotten a very good move. And the question in, I think, everybody's mind in the Wall Street IO community is Apple going to continue and spike up above 120, or is it finished here? Now, can't say conclusively, but it is starting to outperform the market. Money flow is fair, not great. was much better back here in March. And the underlying fundamentals are not positive. So based on the power gauge methodology, this is a stock that is not encouraging. Now, if you like the potential for the iPhone 7, you might consider Qualcomm, a stock that had been completely mismanaged and had a bearish power gauge rating for over a year back in 15 going into April of 16. But the company's turnaround efforts, cost cutting, better controls are starting to pay off. And you can see the shorts were covering and Wall Street buy recommendations were cropping up in droves. You've had positive earnings surprises. And Qualcomm is making new highs, whereas Apple is struggling to get above 120, not even close, 115, sort of the lid on the stock right now. So if you like the potential for the iPhone 7, you may want to consider Qualcomm instead of Apple. It's finally getting its act together, lots of good money flow, classic Chaikin bull. Everything is lined up. It's what Warren Buffett likes to call the fat pitch. So wait for a signal, buy the dips, buy the lower band, buy the relative strength, buy signal. Probably a better bet than Apple at this point. So now you know how to trade like an expert, because the Chaikin Analytics methodology really is based on how the experts make their decisions. And to put all of this power at your fingertips, we did create Chaikin Analytics, which now includes our stock screener, options play, earnings alerts, and the intraday chart, with news coming in our next release in early October and ETF ratings after that. So a full suite of functionality. We've never once raised the price. Can't promise you that we won't, but everybody who buys in is grandfathered at this price when they renew in a year. So to make it as attractive as possible, to put all this power at your fingertips, we have a webinar special for the Wall Street IO community, taking the normal price of $1,950 for an annual subscription, taking $200 off, reducing the cost to $1,750. Go to chaikinanalytics.com/expert. I know Joe's typing that in the question box as we speak. This offer expires on Friday, September 23rd at midnight. Now, we add additional value to your subscription by giving you a small group and one-on-one tutorials to help you learn the features of Chaikin Analytics and how to use them. Joe Bicella and his customer success team, Michelle, Josh, all committed to your success. We also have daily morning insights from my colleague, John Schlitz, so you don't have to stay glued to CNBC to find out what happened overseas and what the futures are doing before the opening. Highlights companies that have reported. And you get my weekly market insights, my market opinion, bullish and bearish stocks and groups, and a stock of the week. And 2 weeks ago, that stock of the week was Electronic Arts. Another classic Chaikin bull with a series of positive earnings surprises. The stock was trading at 78 and change, and it responded to that oversold buy signal by moving up very nicely to 83 and change as we await the Fed. This is a stock that's likely to make new highs because power gauge is bullish, relative strength and money flow are supporting it. So buy the signals. Now, another expert who's really discovered Chaikin Analytics is John Malden. John's more of a macroeconomic guy with a very big following. Over 1 million people get his free newsletter every week. So we had John Carter, who's a great trader, and now John Malden saying, my analysts are enthusiastic users of Chaikin Analytics. They use it to analyze the trades and recommendations of our writing team, giving them feedback. Marc's system has been integrated into our routine due diligence process for vetting and evaluating potential investments. And John has become a new partner of Chaikin Analytics as well. So this is what we call the fast action bonus. It's a call to action. You've got to act now, just like you have to pull the trigger on a stock like Electronic Arts. So if you act now and subscribe by midnight tonight, we'll take an additional $100 off the price of Chaikin Analytics, the annual subscription, reducing it to $16.50. And the first 10 people to subscribe will get a one-on-one phone conversation with me. They typically last a half hour to 40 minutes. Everything is up for grabs, except we will not make specific buy and sell recommendations. So Joe, why don't you click on the link that you put into the, was it the chat box or the Q&A box?
It's actually in both. So if I go ahead, and Mark, if you want me to show my screen.
I do.
All right, so I'm going to go ahead and pull up my Google Chrome. And so if you look within the chat box and you go ahead and click on the link, chaikinanalytics.com/expert. Mark, let me know if you can see this. Pretty straightforward order page.
I can.
So what we'll do is once we have you in the door, you can see that the discount code is already applied. First thing we're going to do is we're going to go ahead and get you registered for one of my onboard sessions. So either myself or Michelle Greenblatt, who's one of our best members of our client success teams, we host these onboard sessions each afternoon where we're going to show you the ins and outs. We give you a nice preview today of what a great stock looks like. We showed you the screener, but certainly we want to make sure that you know how to find a stock, you know how to create a list. So a lot of those basics we want to get down so that when you have your conversation with Mark, if you're one of the first 10, you'll be good to go, and you won't, you'll spend your time really talking about the in-depth type of analysis that really is what makes you profits. So
this is how easy it is to subscribe to Chaikin Analytics. Click on the link, the discount's already applied, and you can be in one of Joe's or Michelle's training sessions as early as tomorrow afternoon. So with that, I'd like to thank Micah again for sponsoring what has become a quarterly ritual.
Well, thank you, Mark.
And see if you have any closing thoughts.
Yeah, wow, this has been a really great presentation. I love what you're doing with your screener and how you've kind of comboed that with your options play. I think that combination really leverages really the power of your Chaikin Power Gauge, and it makes it so much easier to scan for stocks and find actionable option trades around them. I really enjoyed that part of it specifically. The second thing was the 20 factors that you highlighted today that I kind of said something about in the middle. I think, again, just really show how much time that your platform saves people instead of having to go through and do all that research. And I've been a Chaikin subscriber myself for over 2 years. I'm just really impressed with everything you've done for us. And I really do think Chaikin Analytics and Wall Street AO are a perfect fit for each other. I really want to recommend that all my friends at Wall Street AO sign up today. Get your hands on the Chaikin platform. They really do take good care of you. Huge thank you today to Mark for sharing all your knowledge with us. And thank you for giving our members a pretty sweet deal by taking a few $100s off. I definitely think everyone should jump on this opportunity.
Well, thank you, Micah, for the kind words, and we look forward to your presentation later in the week to the Chaikin community.
Sounds good, Mark.
Have a good evening, everybody. Joe, I'll give it back to you to wrap it up.
Excellent. So with that said, everybody, again, just to echo Mark and Micah, we want to thank you very much for spending your time with us this afternoon. Don't forget that we are recording this session, so we're going to go ahead and send out a recording of this tomorrow morning, so keep an eye out for that. In the meantime, again, make sure to take advantage of Mark's offer before midnight tonight. So on behalf of everybody here, have a wonderful evening, and we will see you tomorrow on our onboard session.